Discipline is choosing between what you want now and what you want most. Abraham Lincoln. And my friends, what you want most is not that extra 15 minutes off. You want to spend that 10 to 15 minutes each and every day charting the markets, learning how to trade, practicing and doing on-the-job training. Let's jump into these charts. Big swing up for stocks today. Nice swing up also for Bitcoin. Bonds hammering down, gold down. Let's jump first into the S&P 500. Now, our models are very interesting as I look at both of them. One of them has a directional probability of 65% up. Everybody has the entry point at 74. Our exit on the first model is at 580. The other is 588. Our first model, our upward probability 65%, 80% on the second model. I tend to go with the first model because this is the first day, but it is a big presto changeo after 3 weeks of really strong down movement. Last week slowing down. We can see on the 2-day chart, Tuesday, Wednesday, green spinning top. We had a doji for Thursday and Friday, and then, you can see where things have come to a bottom and then shot up today. Now, as far as the Heikin Ashi candlestick on the weekly chart goes, we can see there was some volume, but again, we can see even on the half day, we didn't get up to average. We did have price bang up, but I still don't jump through the roof with an 80% bullishness. I like the 65% better. It makes me feel more comfortable. If we jump into our entry point, then of course that would be just about where things are now with an exit around 580 or up to 588. Our backtest accuracy on both models is 70% on the 65%, 78 on the 80, but I do question that 80 a little bit. Now, do be careful. We want to buy it around the 574 on confirmation of a second green Heikin Ashi candlestick, the 195-minute chart. Set a sell order at 580, a stop loss at 570. So keep that in mind. If it drops hard below 570 after you get that green entry candle, then of course you want to pull it. It's not working. But again, check it out. That is where we are now. Again, we're not a stock calling service. We're an education firm. I want you to practice trade with us. But you're going to learn by practicing. Whether you are paper trading, however you're keeping up with it, give it a shot. Think about it. If it's making sense to you, you see the green candle tracking, you see things moving in the right direction, pull the trigger on a practice trade. Now let's look at where we are on the NASDAQ 100, the tech stock. So, and by the way, S&P up 1.79%, the NASDAQ up 2.04%. Now the NASDAQ is not as bullish on our first run of the numbers. It is upward of 60%. Our second chart, same thing, 75% bullish. And again, I am a little more cautious here. Entry point is around where it is now at the 490.47, exit point 500 on our chart that's showing the 60% upward probability. When we look at the much more bullish chart at 75%, our entry point is again at 490, exit is at 505. So we're 501, 505 on the other. Backtest accuracy on the 60% upward probability, 65%. The 75% upward probability, 74%. So as we look through this, just keep in mind the buy point is where it closed. Sell at 500, stop loss at 485. So again, if you're going to practice trade this, keep that in mind. Like I said, our one chart, again, higher than the other. They're both with the S&P and the NASDAQ. They're off about the same percentages. Everything is bullish. And again, don't have any trouble with the change. Just want to be careful there. Make sure to know where your loss limit is on those. Just want to be careful in case it pulls right back down and whipsaws. You don't stay in a loser trade. Now, let's go on to 20-year U.S. government bonds, pulling back 1.03%. You know, we saw where things had the interim high all the way back at the beginning of March. We had a green spinning top much lower last week. We had a green up candle, little wick on the bottom, again, not reaching up to the high, going all the way back to the first of the month, or the first week of the month. And this week, starting off, breaking through that rather weak weekly trend line, you know, decent volume the last 4 weeks. So as we look at things on the 2-day breaching, and we saw things in the morning breach, the weekly trend line on the half-day chart, we are sideways, weakishly bullish right now. And again, as we look at things, I am not super excited. Downward on one of our charts up to 70%. I don't see that. I see more, I'm in more agreement with our second chart of a sideways weekly bullish at 55%. I'm not jumping into that at this point. Either way, I think it's way too iffy. One down day doesn't mean that the that 20-year U.S. government bonds is rolling over. We'll keep a close eye on that. If you were interested in entering at where things are right now, we would just caution you, sell short at the 89.56 on a confirmation of a red Heikin-Ashi down candle, cover at 87.50, and then stop loss is at $91. So again, just keep your eye on things. We'll see if indeed things are going to continue moving in the right direction, giving you a little over a couple of dollars of down movement. Again, cover at 87.50. Now again, I'm very ambivalent on that. Just sort of feel like it is a sideways slide. It may turn into more as the week progresses, but right now, even though it was a nice down day, don't know that that makes for a total change. What's up with gold? Gold pulling back some for the day. You can see it's 2 days of down movement for gold. We have a doji forming here on the first day of the latest 2-day candle. Our last interim high was back on the 2-day charts. That was on Tuesday, Wednesday, and you can see that high actually happened on Wednesday. Looks like it was in the afternoon, and then slowing down, moving over since then. Where are we with gold? We're still bullish on gold on both the charts that I ran. One is just 55%, the other is higher, but again, not with this kind of down move. If you're looking to get into gold, of course, you want to have a confirmation of a green candle going up. And again, if you do see that at the 277.50 or higher, of course, you could jump in. We see the sell point at 280, a stop loss at 275. Again, closed at 277.25. So keep your eye on gold. This may be a short-term pullback, but again, you know, we are struggling at this point on that 2-day chart. Down on the half-day. Weekly is again hard to make a call. Nice week last week, though, with decent volume the last 4 weeks. So again, I understand why our charts are showing still bullishness there. Lastly, we'll take a look at Bitcoin. Bitcoin pulling up hard for the day. Nice to see a green candle after 1, 2, 3, 4, 5, 6, 7 red down candles. Slowed down in the down movement last week, turning green. For Monday, we can see where the 2-day chart pushed through with the Thursday, Friday, and then the first day of the latest 2-day candle moving up. We can see where things pounded up in the morning. Looks like maybe got up there in the afternoon, maybe not, but 5.09%, 5.09, so a nice up day. Our charts are showing us 60% on one, 70 on the other, bullish. Backtest accuracy is around 69 to 65% respectively. Jumping in point on our 60% chart is at approximately levels we are right now. $25, yeah, they're both around the same. The 25.98 mark. Exit around 26. And again, expected move of about $1 or $2 up till we hit, of course, a bit of the resistance. And again, back test accuracy, like I said, is around the 65+%. So again, hopefully we're seeing a nice turnaround in Bitcoin. We will continue to track that. Of course, throughout the week, it's about time. Bitcoin has pulled back, looking to see if there's anything that shows us a bottom over time. And I'm not seeing it, but again, as it continues to shape up, if indeed it does, maybe we'll get ourselves a nice rally in Bitcoin. I'd love to see that. We'll continue to keep an eye on these charts. You have questions, problems, concerns, we'd love to hear from you. Don't hesitate to reach out to us. CW@chartingwealth.com. God bless, my friends. All the best. And don't forget, we will be putting our trade execution summary grid up online for you. If you are a subscriber, you'll get it in your show notes. If not, you go to chartingwealth.com and sign up for free. Doesn't cost you anything. We don't spam or sell that list. You'll get our email in your email box each and every day after the close of the markets. God bless.